What is going on, everyone? Welcome back to the channel. It's been a while. I'm sorry for being inactive on YouTube, but we had uni start up again. So yeah, last year of uni, and I thought I'd start a little series where I just review my trades every week. Because yeah, I don't have as much time anymore to make content. So yeah, on my Instagram, all I'm doing is just posting each trade I take each day. I'm showing full journal on Swift, which you can see here, just sort of showing everything. I only started this week, right? So yeah, I'll try be as transparent as I can, try be as real as I can, and just share every single trade I take. So that's what we're going to do. We're going to review every trade I take, and it's all just going to be about trading, about the trades I took, what I did wrong, what I did well. And I'm sure you guys, if you follow along week by week, will gain essentially an entire trading system, along with a lot of good psychology and a reality of what trading is actually like. None of this BS about, Lambos and whatnot. So let's have a look here. You can see this is my Blueberry account, live account, which I started last week, just to sort of keep it on track. And yeah, this week we took 5 trades. We had a bit of a mess up here trying to take Euro USD and NZD JPY trades, which you'll see these were really good trades, but I just don't trade these pairs. And this came about from GJ has been wild the last couple of days, weeks, and yeah, I just snapped a bit in patience. Not the worst. I mean, it wasn't like a ruined trade because I managed risks. I took it normally as I would on GJ. It's just not in my plan, right? So we'll have a look at that. But you can see we finished the week plus 1%, right? So a bit of a slow week. It's been tough these last couple of weeks. Results have been good, but it's just been slow, right? And that's because the markets have been extremely volatile. So let's have a look at this first trade on gold, which was on Tuesday, right? We caught 31 pips. And yeah, it was a pretty simple trade. Let me just get that trade up for you guys. It was right over here. Yes. Okay. So let's go into replay mode and let's have a look. So I believe, no, it was here, right? It was over here. Okay. So this was, what time is this? This is pre-London, right? So 1:30 a.m. Eastern is right about when I start trading. If you look at the 4 hour over here, obviously it's going to skip forward a little bit, but key thing here is we came down in Asia and sort of created this big low. Pardon me, this was in Asia. It's almost like the day before. Created this lower low over here, right? We come up, lower low, lower high, lower low. And what do we do just before London is we create some resistance up here, right? So we pull back, create resistance by this 4 hour closing bearish, right? We can go back one more candle just so it makes a bit more sense, right? So this was what I was seeing coming into pre-London. And what do we know? If price creates a low, right, comes back, finds resistance, closes bearish, it's logical that price is going to continue down, right? Especially if on the lower time frames you start seeing sort of resistance being created and rejection, right? And then support's been breaking the lows, and it just continues down. Very good chance you're going to continue to fill this range, right? So that was the plan heading into pre-London. Very simple, just using the higher time frames to identify, okay, we're in a pullback, right? But maybe we found resistance up here and we can continue down, at least sort of grab these lows over here. Even if we're going to come back and continue bullish, we're likely going to grab liquidity to then continue bullish, right? So we have a shot of getting a little trade in here, which is 56 pips, right? So let me just mark out 4 hour resistance up here, right? So 4 hour resistance, and then we can scale down to the lower time frames. We can start seeing the hourlies doing exactly what I was talking about, sort of creating resistance, creating support, and starting to break below support, right? So if we can start breaking below here, lots of clean range, 290 pips to continue down, right? We go to the 30-minute time frame, very similar situation. We just got to mark out some of these 30-minute levels of support, right? And then we can see again lots of clean range below here, right? So we mark out this one as well. We can mark out this as a watch zone, right? Because we passed through that level, but it's still a level where we've reacted to before, right? You can see even back here we reacted to this range, couple of weak rejections, couple of reactions to that level. So it's definitely an area to mark out. Okay, then we go down to the 15-minute time frame and we're just doing the same thing, right? we can draw this 15-minute level of support down here, right? And then we know, okay, so if we start breaking below here, we have 27 pips of clean range. Higher time frame has created resistance. Good chance we're going to continue down, right? Same within here, we got a little bit of clean range, and these in here is going to be your aggressive options, right? So aggressive option, aggressive option. And what I mean by aggressive, it doesn't mean it's a lower probability trade. It just means you have to manage risk more aggressively, right? Because if you're in a trade, let's say you take a trade over here, and price starts pushing down, right? If it taps into this previous 15-minute or an hourly support as well, there's a good chance you're going to react to that level and reject, right? So you can't just ignore those levels. You have to manage risk at those levels, right? And then we know below here, this is going to be our easy sells, right? Because we have clean range. Last time price was in this area, push through, right? Push through. We scroll back. What do we see? Push through. Little bit of reaction here, but generally through this range, we push through very nice and easy, right? So let's see what happens. It's still very early right now. So it's still 1 a.m. Eastern, so a bit early, right? And what do we see here? There's that push into this level we identified where we have aggressive sells, right? And I was looking at some sells here, but I wanted to see a top wick to flip up and then go bearish again. Otherwise, we have 60 pip stops, right, above the candle high, and we have to manage at 9 pips. So it's a bit like you're taking such a big risk for such a small potential reward. But as you can see, it just smashed down, right? Smashed down straight through these levels. So it's an option to just take it off the rip, sort of, and use previous candle stops, especially if you have some 5-minute structure, which I'm not sure if you did. Yeah, you didn't even have 5-minute structure. So very tough to sort of justify taking that. But in the end, would have got you 1-to-1, right? Would have got you 1-to-1. But that's just something, you know, it didn't really feel worth it to me to have to be in this trade 9 pips, and then as soon as you're here, you have to go break even. And it's like the probability of price pushing through all these levels, not that high, right? So then we had this 30-minute breakout, right? So 30-minute breakout over here. You look at the 30-minute time frame, very nice breakout, sort of like a head and shoulders after seeing this 4-hour resistance up here. You're breaking the lows. You should get a good push down to these levels, right? But again, look how big the stops are, right? If we want to take sells here, we have 82 pip stops, right? And down to this level, you have 54 pips, and you already have rejections in this level, right? So it's again a similar situation where it's like the volume has pushed through, unfortunately, and you have to sort of adapt here, right? So what do? You go down to the 5-minute time frame. Okay, this is promising. We have 5-minute structure over here, all right? So 5-minute structure. So already you can sort of start reducing your stop loss to around 58 pips above that structure, and then you start getting a 1-to-1, right? But what ended up happening is we ended up sort of jiggling around here for a little while, right? And then we created this head tail structure, right? Which, if the guys in my Discord, you know, head tails, very good chance you're going to continue down, right? Especially if you're rejecting and closing below previous levels, right? So you can see here, exact same sort of pattern on this head tail. What do? Smash straight through. So, right, so exact same pattern. And remember, you already have the 15-minute breakout, you have the 30-minute breakout. Now, if you think about what a head tail actually is, it's price coming back to these levels, retesting and rejecting, right? So all a head tail is a break and retest, right? It's just when you can understand how wick candles and sort of how to read candles backwards, it just makes sense that if you now start breaking these lows, break, retest, rejection, continuation, makes total sense. And you have a lot safer stops here, 30-ish pips. I think I entered a little bit earlier over here, just as I started seeing price start to break down. And yeah, we just targeted that 1-to-1 right around here as price start pushing down. And I think, I'm not sure where exactly I closed, about 31 pips, right? So just around here. Ended up closing 1-to-1, happy with that. You can see some reactions to this level. It is an opportunity to close runners, but you know, first trade of the week, I was very happy taking a 1-to-1 and just settling into the week. You can see there's reactions here, so you can't just ignore these reactions to this level. You really have to look to TP, and as you can see, huge rejection. So very happy with that trade, plus 1%. You can see over here, that was this one over here, right? So we ended up 29 pips and 1%, 1.08%. So very nice trade. Okay. Next one on Wednesday was GJ buys, right? And this one was a little bit unfortunate because we ended up getting break even when really it should have been a pretty easy win. So where was this? 7th of August. Let me just find this trade. Yes, I believe right over here. Let me just, yep, this was it over here. I'm on the 5-minute time frame. That's why I couldn't recognize where we're at. So why is this so hard to find? There she is. Okay, so this is the trade over here. Let me just go into replay mode over here. Okay, so if we look at the 4-hour over here, all right, so first of all, we can see 4-hour has broken and closed above previous resistance. All right, so very simple, easy trade. 4-hour broken above previous resistance. This 4-hour has closed, right? It's closed bearish in that head tail structure, which is interesting. So if you start breaking the highs, good chance of continuation. I believe the daily was also bullish. No, daily was bearish, but we have enough evidence on the 4-hour time frame that we're breaking new highs. And there's a good chance we're going to continue bullish, right? Because the bias is bullish, right? Price is breaking above resistance, finding support. We've come down to this level, retested, rejected, good chance we're going to continue bullish, right? So you go down to the hourly time frame and exactly this is what's happening, right? So this is perfect break and retest, right? Price comes up here, creates a high, comes down, finds support, closes bullish. Very nice trade, right? You look at the 30-minute time frame. You could even, if you were very aggressive, start looking to take buys on this 30-minute close over here to retest back to the highs, right? That's definitely an option. Easy one-to-one back up to the highs. The only reason I didn't take that is if you look on the 15-minute time frame, this was that 30-minute bullish close. And if you wanted to take this trade, you're heading straight into 15-minute levels of resistance, right? So as soon as you push up, you're heading straight into this resistance over here. Okay, so what ended up happening, just waited a little bit longer. We can see we have this 15-minute level of resistance up here. And all we're doing is identifying prices found support, right? We've created a high, good chance we're going to retest this high, right? Almost the exact same as a gold trade, just on a bit lower time frames and the opposite direction, obviously. Okay, so we look over here. What can we see is this wick is 10 pips, which is pretty big on GJ, right? So 10 pip wick fill is definitely not something to ignore. It's definitely something you can capitalize on and use. So exactly what happened is price came down, created a bottom wick, top wick as well, a little bit of a top wick, and we entered as it broke its own high once again to try and get that wick fill, right? So we can go down to the 1-minute time frame just to make this a bit easier. So here's the close, right? So what we want to see is price sort of create a bottom wick, flip, and then continue to fill this wick, right? And then we can use this wick to manage our trade, right? Maybe even TP if you have good enough stops. But stops here are looking like 40 pips, right? So you have to be careful here, but you do have 5-minute structure, seeing price reject this level like that, right? So massive rejection, grab liquidity, come down, retest, continuation. And yeah, it's exactly what happened. We sort of pushed down as soon as price broke these highs again over here. Right, so first 5-minute continues down. Now we have a stop loss, 22 pips. We have 5-minute structure. If you break these highs, good chance you're going to continue bullish, right? So nearly got stopped out on this one, but luckily it ended up continuing bullish. And another thing, look at this 15-minute close, right? Head tail 15-minute close, extra confirmation that price is going to continue bullish. Notice how we didn't fill the wick here, right? So I haven't gone break even yet. We haven't filled the wick. So next thing, you push up very bullish. Unfortunately though, as price pushed up and filled this wick, I went break even, right? So I went break even over here and our entry was like here. And you can see price filled the wick, right? I was at the gym, so I couldn't manage this trade sort of based on my sort of understanding. I had to just go hard break even because I couldn't sit in the gym and look at the 1-minute time frame. So as price went up and filled this wick, I went break even, and yeah, unfortunately we got stopped out, and that's just the way things are. Not much else you can do about that. It's a little bit unfortunate. If I was at home, definitely would have gone mental break even. So I would have waited for price to sort of push up, fill this wick, and then I would have sort of started trailing my stop. Look at how price reacts to this level on the 1-minute time frame, because very often price is going to push up, sort of come back, retest, then continue, right? And there's nothing wrong with that. You just have to be very cautious of how you manage risk when that happens, right? But it's definitely an option to sort of use mental break even, and just sort of monitor how your entry is being reacted to on the 1 minute time frame, especially because we have structure here, right? We have a resistance which we can react to, and as you can see, we reacted to that level perfectly. Okay, the better trade, looking back at it, would have just been wait for price to create this head tail, right? Stops below here, 30 pip stops, and there's your trade, right? Simple as that. Wait for the break of the high, continuation, and easy as that, right? Back up to this 15-minute level. But you know, you can't predict that. That's just, yeah, if I was home, would have been a very nice win. But yeah, nothing wrong with that trade. Very happy with it. Unfortunate to get break even. Can't let things like this impact you, right? So very simple. Just identifying the 1 hour created a support, right? After creating a high, good chance we're going to continue and at least retest the highs over here, right? Simple as that. So that was the second trade, unfortunate break even. Then if we look to the next trade, these were on Thursday, right? So we actually had 3 trades on Thursday. 2 of them were a bit dumb, I will admit, a bit stupid. They made sense, they were just a bit unnecessary, right? And I hope you guys can appreciate, like, I still make mistakes, right? I still make mistakes, but key thing is I didn't let the mistakes sort of turn into bigger mistakes. You know, we managed it. It wasn't ridiculous mistakes. It was just sort of a bit of impatience. So Euro USD and NJ, right? And the only mistake I made was that I don't trade these pairs, right? I don't trade these pairs. So it was like, why am I taking these, you know? Even though they made complete sense and Euro USD ended up winning, it's just like, I don't take these trades. So why would I take them now, you know? So this was the Euro USD trade. Let's go into replay mode over here. And this was just a very quick break even. It was worth a shot, I think. But again, it's just like, this isn't my plan. So we don't even have to look at the higher time frames for this one because it was just a straight up easy trade. You look 15-minute levels over here, very clean range, right? If you look at the 4 hour, why not? Closure below, very good chance you're going to continue bearish, especially after sort of this huge rejection to the upside. Okay, hourly, very nice. Closure below, easy trade, right? What ended up happening, we closed bearish over here, right? Closed head tail, rejecting this previous 15-minute level over here. Very, very high probability setup. Okay, I entered as price broke this low over here, stops above the previous candle. The plan was simply for price to sort of push, fill this hourly wick, right? And at this level, we can manage our trade. Go break even, mental break even, expect volume to push through this level. Since if you look at this level, it's a very minor level, right? So on the 30-minute time frame, you're clean, right? You push straight through this level, and higher time frames as well, you push straight through that level. So yeah, I took this trade, but because it wasn't my plan, I started doubting it, right? I started doubting it. I started not fully focusing on just taking a good trade because it wasn't my plan. So I couldn't be confident in this trade. I hadn't back tested it. I hadn't planned it. I was just randomly scrolling through my old watch list of pairs I used to trade. And I saw this and I was like, this is going to work, right? But when you do that, you're directly disrespecting the market, right? And you're going to get slapped because either psychologically, you won't be able to handle taking a good trade. As soon as you're in drawdown, you're going to start doubting it. As soon as you're in profit, you're going to start wanting to close because you are scared of losing, right? So when you don't have a plan, you're automatically scared of losing, right? Because you don't know what's going to happen. You don't have data. You don't have experience in exactly what it is you're trading, right? All I have experience here is price action, right? I haven't traded Euro USD that much, but I know price action and I got cocky, right? Got impatient. GJ wasn't doing anything. And what do? We take this trade. It makes technical sense, right? But as soon as price starts pushing down, right, and then rejecting, I go break even, right? I start closing the trade early because I don't have confidence in this trade. If this trade was on 100%, I would have just left it open, would have left for this wick to be filled, and we would have won, right? But because I didn't follow my plan, because I didn't have the confidence in this trade, I wasn't able to execute it as well as I should have, right? And this is such a big lesson in trading, right? Following your plan gives you an advantage, right? You may miss trades, you may miss moves, you may not get every trade, but because you respect the market, by respecting your plan, you're going to be confident in your trade, and that will cause you to have good execution, right? So it just shows you like your decisions is what's going to make you profitable. It's not your system, right? Anyone could have taken this trade, right? All you have to know is this pattern, right? This head tail pattern where price closes below, you know you have clean range, you know the higher time frame's bearish. Anyone could have taken this trade, right? Not everyone could have sort of not gone break even, held on to this trade, even though you're in drawdown, right? Because not everyone has that confidence in their system. Not everyone has that long-term view. So yeah, a little bit disappointed with myself for taking this trade. And after taking this, I was like, screw it. It seems to work on the other pairs. So why not? Let's just take another trade. So next trade we took on NZD JPY, exact same situation, right? But this time I was confident. I knew, okay, there doesn't seem to be much discrepancy between GJ and NJ. It should be pretty much the exact same, right? So here we go. I already have it marked out. So it was like pretty much the exact same. It made technical sense. It was a good trade, but it didn't follow my plan, right? And you take a loss when you don't follow your plan. It's just momentum killer, right? It's all it is, just a massive momentum killer. So you look at the 30-minute time frame. We can go into replay mode to make this a bit more clear, right? 30-minute time frame, you have a 30-minute breakout, I believe also an hourly, no, not an hourly breakout, right? But you look at the 4-hour, what's the 4-hour doing? All right, 4 hours closing bullish after creating this high, right? So nice bullish close. Then you come down, create support, good chance you're going to retest back up to at least sort of grab liquidity, even if you're going to continue down, right? So that was the premise of the trade, sort of hourly pushing above into this clean range. 30-minute, very nice breakout, 15-minute, nice breakout. And the key thing here, if we are just looking at this from a technical standpoint, is we have very nice 5-minute structure, right? So look how clean this range is. Every time we've gone into this range, we've pushed through it, right? Then you look at the 5-minute time frame and you start seeing, okay, 5-minute is creating support, breaking above resistance, right? That's all it's doing. Look how clean this range is. So the higher time frame's bullish, the intraday hourly 30 minutes bullish, 15 minutes closed above, right? We have a really good indication that price is going to respect these previous levels of support, especially when we have bias and volume, right? It's pre-NY, NYSE, pardon me, very good chance you're going to push up and fill this range, right? So we have a good stop loss, 20 pips, and unfortunately price just sort of, I saw this very nice head tail closure. I was like, sweet, we're going to win. Very easy trade. And yeah, it wasn't an opportunity to manage and it just dropped out of nowhere. It needed that one more liquidity grab, right? And there's your trade, right? There's your trade. So unfortunate. Was I super pissed off at myself? Not entirely. It made sense, right? It was a good trade, technical sense. I see this on GJ, would have taken it any day of the week, right? The only thing I'm not happy about is we took it against sort of our plan, right? So that's your trade, right? Look how simple that is. That's how simple your trade is, right? You wait for the breakout, stops below here, and yeah, there's your trade, right? Very, very simple trade that. So yeah, can't be too sort of pissed off about that. -1%, it is what it is, right? Yeah, a little bit disappointed in myself, but it's like GJ wasn't doing anything, right? We saw an opportunity on NZD JPY, trusted my technical analysis, trusted my understanding of price action. It just was a loss, right? But here's the important lesson about this, right? If I took this on GJ and took a loss, no effect on me, right? I'm chilling, who cares, right? We expect losses. Losses are part of this game. I take this loss on NZD JPY. It wasn't my plan. I go into the next trade thinking, damn it, I could have still been up, right? I could have not lost that 1%. That affects your next trade automatically, right? So you got to start thinking about following your plan isn't for the sake of following your plan. It's for the sake of your mental capital. It's for the sake of your long-term performance in this game, right? If you're looking at every single pair, sure, you can get trades every single day, right? You can get trades every single day. You get multiple trades every single day. But you got to think, is that a sustainable system, right? Is that something where I'm going to be able to really lock in and focus on my trading for 5, 10, 15, 20 years? It's like, probably not, right? If you have a clear plan, it's like, it just makes things so much more easy and so much more able for you to follow the plan, right? So yeah, that was a trade. And yeah, then we ended the week with a very nice gold trade, which was really, really simple. Just sort of, this was straight after the NZD JPY trade. And it's like, this is the thing about it, right? If I didn't take that NZD JPY trade, I just waited for my plan on gold, we're up 2% for the week, right? But unfortunately, we got caught up, right? And this one, super simple yet again. Where are we over here? Where are we at? So yeah, this was the trade. Very simple, 15-minute level over here, clean range above, hourly breakout. 4 hour is pushing bullish, right? Breaking the highs. Look how clean this range is. And then you get a very nice closure above this level, right? Lots of volume. You have a 25 pip wick fill. Key thing here, stops are looking at 100 pips, right? So you need to wait for price to create a bottom wick. A little bit more of a risky trade using the bottom wick, especially because we didn't have 5-minute structure, right? But this is where sort of experience comes in, and you understand that when gold is in clean range, when NYSE is on, right, and volumes present, you've rejected the lows a lot, you have a lot of liquidity, it makes a lot of sense to wait for price to create a bottom wick, use that bottom wick for volume to just drive through this level, right? So that's exactly what happened. Created a bottom wick, and then it just jumped, right? We had a little bit of nervy times over here, but that's why you put your stops a couple of pips, 3 or 4, 5 pips below the stops, right? Give it a little bit of room. Sometimes gold will come back, grab liquidity, and then just jump up, right? So that's the only reason it's a bit more of a risky trade, because sometimes you can just sort of get liquidity grabbed when the volume isn't there. But you know, identified the volume. All we did was mark this 4-hour level over here, and then just TP'd at that 4-hour level, I believe. Yeah. So very simple trade. 1 to 2, we only went half risk on this, and yeah, got a 1.14%. So finishing the week plus 1%. Happy with the week. It's been tough these last couple of weeks. GJ's been on some crazy stuff. Gold has been good. Gold's been very good, actually. No complaints with gold. But key thing to think about, right? So we had the gold trade, right, which was 1%. Then we had the GJ trade, which could have been 1.5%, right, but we got break even, right? Then we had the NZD JPY trade, which could have been avoided, right? So then we're up 2.5%, right, instead of 1%, right? And then we had we're up 0% instead of 2.5%, right? And then we had the gold trade, so you end up 3% instead of 1%, right? So it just shows you decisions is key. It's not anything else but decisions, right? I could have had the exact same strategy this week, but depending on the decisions, I could have made 3.5% instead of 1%, pardon me, right? So I want to show you guys the reality is it's all decisions. It's the decisions you make, the consistency you have, the execution you have, right? And that's something I'm still working on. You're always going to make mistakes, right? But it's very good at the end of the week to start thinking, if I just followed my plan, right, and didn't do any dumb shit, where I've ended up. Sure, the break even was a bit unlucky, right? Things like that are going to happen. So maybe you can't count that, but still you're up 1% instead of 2%. That adds up. But yeah, hope you guys enjoyed that. If you have any questions, feel free to let them fly in the comments, and I'll see you guys next week.